As summer continues to heat up, we look under the hood of the U.S. economy to bring the insights that business owners need to know. My name is Paul Hsiao, and I'm part of the asset allocation team as UBS CIO. While the current economic regime is still in reflation, where growth and inflation are above trend, we expect both growth impulse to cool in the second half of the year and for disinflation trends set to continue. We expect the broad consumption trend to slow in the second half of the year, and there's growing evidence of a K-shaped economy. So upper income owners appear to be driving increasing share of consumption, helped by buoyant financial markets. And we observe that happening in both macro and micro trends. For example, upper end hotels are outperforming lower end hotels, and the same thing is said for retailers. Yet spending for other consumers may slow as the labor market broadly remains in a no hire, no fire environment, which is putting downward pressure on wages. The latest CPI print confirmed two trends that we're seeing, both positive. The first is that the peak of tariff-related inflation implemented last year appears to be behind us, as well as tariff-related goods continue to show an ease in prices. And the second thing, which is also good for policymakers, is that we're seeing energy prices continuing to moderate and stabilize as we're seeing geopolitical tensions in the Middle East start to decrease. And barring no re-escalation in tensions, we expect that trend to continue happening in the second half this year. So for policymakers, as we've seen from this chart here, they've penciled in a rate hike this year because they think inflation will remain above trend. And that's something that new Chair Warsh really wants to combat. While we don't think that one inflation print is enough to change the overall picture, it does give us confidence about the underlying narrative of a cooling inflation environment, and thus we're increasingly confident of our out-of-consensus call for rate cuts to begin next year instead of the market priced-in rate hikes that are supposed to start at the end of this year. So regarding the midterms elections, we expect the Democrats to take the House, while it's still about 50-50 regarding the Senate, with slight odds favoring the Republicans of holding it. Regardless of the outcome, we think that the expectation should be for a divided government, which historically has been robust for risk assets as well as the overall economy. One thing to watch out for, in our point of view, is for greater regulation over AI companies, since it's become an increasingly bipartisan issue. To read more about how to navigate this dynamic market and macro environment, please take a look at ubs.com and search for the latest edition of the CEO Macro Briefing Book. Thank you.